Hello, trade pros. Hope everyone is doing well. And today we've got another YouTube video here ahead of us. And in today's video, we're going to be talking about how to trade double tops different ways and or multiple tops. So in this video, we're going to be breaking down a pattern scenario in the markets, and we're going to be focusing on the day trading aspect. So you can apply these techniques to any day trading asset that you're looking at. And I'm going to break down the process using multiple different steps and multiple different tools. So on my screen here, you guys can see this is the SPY, the S&P 500 ETF, and I'm going to be focusing a lot on the double tops in this aspect to give us a better glimpse of what is going on. So this could be attributed to both double tops and multiple tops, and you guys can try this pattern out, test it, back test it, and see how you like it best. So without further ado, let's get ready for this intro and we'll go ahead with the video. Before we start this video, I want you guys to know that we are going to open up our live trading room for a day, both the options and futures, once we hit 60,000 subs. So if you guys want to see that happen and partake in that, please hit that subscribe button. I know a lot of you that are watching are not yet subscribed. It would help us and it would help you for us to create better and more content. So without further ado, smash that like button, hit that little bell to notify you when we drop videos like these and when we go live on a daily basis, morning and afternoon, for our daily market recaps. So let's go ahead and jump into this video. So when it comes to double tops, first we have to understand the anatomy of a double top. So that's why I'm going to show you guys this darker screen here so we can actually draw on it. Now a double top pattern, let's just call it DT, right? A double top is necessarily a pattern that actually forms one resistance area, right, from this mountainous type peak, and then turns around to form yet another. Right, so the question is, how can we anticipate that this top will form and how do we trade it? Because typically a double top is a pattern that actually starts from low and turns low once again. So it looks kind of like an M-shaped, and to break it down in two simple ways, we can navigate through the double top one of two ways, right? Number one, we anticipate where the top actually tops out, and we just take a trade here for the short side, right? If you're trading options, you're going to be buying puts at this level. If you're trading futures, you're just going to sell the S&P or NASDAQ, whatever it may be. And if you're doing shares, you're going to short the shares, right? So we can anticipate where this top is, right? That's step number one, which is a little riskier, but you can use tools like volume, whatever else you may have, maybe some other indicators, or you can wait for the second part, breakdown of the actual neckline of this double top to capture this move. Now I'm going to show you a slightly different way to capture the actual top of this without being too risky, right? Waiting out for an actual intra move break for that downside slide. So what we're going to be focused on is going to be volume today. We're going to be focused on levels, right? We're going to look at the volume profile as well. That may or may not look something like this. And we're going to focus on candles. So with that being said, why don't we jump into some kind of examples here on the S&P 500 on the SPY? So remember, we are going to look at the double top as a anticipative area rather than more so of a clear breakdown of the M. So for example, here on the S&P 500, we've peaked atop. You guys can see we've moved up to this top, to this green box, right? We want to identify where that green box is once it gets rejected like this. And you can see where we form the base of that support. So should we come into that top again, it's a little more difficult to outright just start selling this at this top. You can with a stop above, right? If you put your stop above and you just blindly do it, but you want to ensure that there is some kind of validity to this trade. So once you map out where these key supports are, right, the volume profile really helps, because when you get a big cluster of volume at an area, once you escape said volume block, you're most likely going to see a transition point into the next volume areas. So in this case, we've seen the M on the double top get transformed, and what we want to do is wait either for the break and sell it or the break and a retest of the lower end of this M. So in this scenario, it looks something like, let me just draw this out. It looks something like this, right? You wait for the break and retest, and this is a high probability trade. So how do we qualify something in here? So number one, the volume profile checks out. Number two, we have our key support that breaks that checks out and the retest. Number three, on a day trade basis, keep in mind this is a 5-minute chart on the S&P 500 ETF. On a day trade basis, I use a 20 EMA on a 5-minute, right? So if we break under and retest it, then we're looking for that continued move. So we're adding a lot of different elements into this double top. So what we want to notice is, what does volume at the bottom of your chart look like? So volume in this instance would be, you can see first 5-minute candle a day, heavy volume. Second one, pretty sizable volume because it's above the volume moving average. Third one starts to kind of taper down, but you can see on this large green candle that spans from about 432.95 all the way up to 433.40, so about 45 cents, 50 cent move nearly, which is substantial, right? On this asset, the volume does not beat any of the first 3 candles of volume. So even though it's a nice green candle, this suggests that there is actual weakness in the buyers, and we come into our resistance point. This is where you either sell the SPY, you buy puts on it, or you short the S&P. You can see where we broke down under the volume profile and that volume confirmed. If you want even another confirmation, what you're going to be doing is going to a 2-minute and seeing this nice red candle shape up here, right, which is an aggressive hanging man type doji type thing that shapes up here for that continued press to the downside. Now, when you get that type of move, typically I just target the next larger volume notches, not including the current day, but the next volume notches. So down here is one, down here would be another, and then finally down here somewhere from the prior day, right? So those would be the targets on that move, and you're not necessarily looking to take this out until you start to see stagnation, big buy volume come out. So remember, the double top is more of a bearish trade pattern. Now in this circumstance, if you trade it like this and you navigate the short from here, where would your stop be? Now some traders will put it back above the double top, but this is quite the distance, right? You can put it up into the daily open or just above these moving averages for that continued move. Now, the second way to trade the double top, right, or a multiple top in this instance, is waiting for more of a consolidative pattern, right, where you can pinpoint a top. So you can see this is not necessarily a double top, but it's one of the multiple tops. You wait for a consolidative pattern of about a few candles and notice how heavy the buy versus sell volume is in those candles. So you could be selling this top after you see a larger red candle shape up here, green candle, pitiful, large red candle, big volume, right? And this is a little easier to place a stop because you could have a super tight stop just in case you're wrong. The other way is when you have a consolidative pattern like this, right? Even if you go to a 2-minute chart, you have a consolidative pattern like this, and you're watching that the sell volume eclipses that of the buy volume. So what you would do is navigate where are the lows and the highs of this consolidative pattern, and you would sell either the break and retest of the lows or just the breakout of the lows. So in this circumstance, you'd say, okay, well, the lows are somewhere around 433.75. Let's just round it. And we could either sell the break, but I prefer the breakdown, pull back up, and then sell this area on a nice doji candle like this with the stop just above these prior wicks, right? And it also comes into consolidation with our moving average. Now, if you use the other approach where you wait for the M, you're selling under this low after this area had confirmed, and you're getting more of a decisive move to the downside. So if I use this day session, for example, as a double top, right? Now, if I use the M approach and I drew something like this, then that means the M bottom is all the way down here. Now I'd have to wait all the way down there to sell it, which may or may not happen. But if I notice that we're coming into a key resistance and I notice that we broke out originally, but we're seeing some kind of consolidative pattern, we can find the base of that, right, as we said, and see how heavy the sell versus buy volume is at these tops. So at the tops, you can see sell volume's not the greatest, right? But once we actually start breaking under here, we could look for that sell. But that doesn't mean that just because this pattern shapes up, we look to sell it. Look at volume. Volume on the buy side is not getting eclipsed by the sellers. So in this circumstance, it's not as eye-opening of a short position and double top as maybe this area would have been. So would this necessarily be a good short? Based on volume, it doesn't look very likely, but based on what's going on in this slow slope, you could find that opportunity. It's all about managing the risk. And if you're taking this, you can easily just have a stop above this area right here, look for the short and see if you can get maybe into the edge of this volume notch. But just based on volume, it doesn't look very healthy for the drop, right? It's getting into a slow stagnation period. So you can use this approach on any other asset. If we come into the triple Qs, for example, and we can see, this was the end of the day, so I don't really consider that. Let's see if we can find a double top on the triple Qs. So here's an example of the triple Q double top, right? So from the prior session, we had a very strong top somewhere in this vicinity, right? Doesn't necessarily have to come into that area. But what we're doing is we're trying to navigate that there's some support down here, right? Whatever it may be. And we get the open of the session here. So we start off pretty big sell candle, tries to hold out, and then you get this massive red candle, red volume. The best way for me to play this is wait for that base to shape up in this area rather than just selling it with the stop above. Wait for the base to shape out right here somewhere where you see this red line, and the break and retest, you're still holding big sellers and you're looking for that continued move eventually to the downside. Same thing here, right? If you have the intraday double top and you have this area, and you're thinking, okay, well, when it comes into this area, I'm just going to see what happens here rather than just selling it. So finally, a doji candle with big sell volume comes in, rotation. You can wait for the breakdown of that base, right, and sell it. Or remember the M pattern. If we go into the M pattern like this, and we say, okay, well, the M break is going to be down here somewhere, you could wait for the break into here, into the next day. But I much prefer being able to identify where the tops are actually going to turn lower, because sometimes you don't get that M break. So keep in mind the two ways to identify the double top pattern, right? If you identify the M and the breakdown of the M, that's great for a more volatile day. But there is a way to identify where we're actually topping out and finding a key support in that area where the base forms on the rotations for the push lower. Remember, volume is going to tell you that there's going to be a direction in this move. So with that being said, I hope you guys enjoyed this video of our double top patterns and how we identify those in the market on a day trade basis, whatever market you're trading. If you enjoyed that, please drop a like, hit that subscribe button, and leave a comment. What else would you like to see? Remember, in these double tops, you always want to manage risk, and you want to have multiple legged confirmations rather than just saying, okay, well, there was a resistance here, that means I sell it again when it comes into that area. Keep that in mind, manage that risk, and you guys are going to find that this is a very helpful tool. So I hope everyone has an amazing day, and we'll see you guys in our next video.